Good afternoon, everyone. Officially, good afternoon. Hope you're doing well. Good to see you guys. Good afternoon, Scotty. Hey, Nadia. Evening, Matthew. And afternoon, Owen. Good to see you. Alrighty. So, first of all, absolutely earth-shattering news this morning for the GBP. 1.7%, which was the annual inflation rate. Unbelievable, to be honest. Obviously, we had a little bit of a chit-chat about that in the chat. If you haven't seen it yet, you can catch up. James raised some pretty good points, to be honest. It was indeed a majority to do with the lack of airtime and stuff, which is always a pretty major influence over CPI. But of course, we've been seeing the sustained level of CPI throughout the last 4 or 5 months because of the fact of the travel. So now we're really seeing the... Bless me. God, I hope I'm not getting what my kids got. Anyway, yeah, now we're seeing like the reality. Okay, this is like, for me, this is what the reality of the inflation situation is like. So it's going to be an interesting one to see the next BOE event, definitely, to see where Gov Bailey is going to be situated with his monetary policy. And to see, because obviously, you know, we've been seeing, I mean, I don't know about you guys, but on my LinkedIn, there's so many mortgage advisors on there being like, yeah, okay, you know, we've got another rate cut due on the next BOE and stuff like this. You can just tell the lack of experience that these people have. To be honest, when it comes to forecasting things like this, I just can't see it. I cannot see another rate cut just yet. I think Gov Bailey's going to get cold feet with another rate cut because he's going to be thinking to himself, right, we've got this sharp drop now. I take my foot off the gas here, and then we're going to end up seeing a spike up in a couple of months' time. What's going to happen in a couple of months' time? We're going to have the highest level of consumer spend in the year, obviously the Christmas period, where we always see a significant spike in inflation. So what is that going to look like? It's a really, really difficult one to be able to forecast at this stage, because of where we currently are situated within the year, and also because of the situation with the economy as a whole. I mean, market impact, you know, what are we going to be looking at in terms of actionable trading ideas? I mean, the pound is going to be high risk from this point on, to be honest. I mean, this morning, this news event, look at the size of the move down we had. In comparison with the general price action from the GU, I mean, it's quite a big move. It's not massive, but it's big enough. We are coming back now for our sort of corrective, as you can see here as well. Market's price has actually risen back quite a lot from this initial move down. We started the day there. We came down about 0.72%, and now we've actually risen from the low. Current price line is printing 130.32, and that puts us at about 0.4% up from the low. So it's not really, as it stands at the moment, moved a huge way, but we have had a bit of a dip down below the major inflection point. So if we look at the daily chart here as well, and we check out what's going on here, this is a really significant point in the GU chart. If we do go for a break of structure underneath this level, then the likelihood is we're going to see price action trading down at 127. 127 is a long way from where we currently are at the moment. And obviously we have to think of then the backlash of the pound being worth so much less than the United States dollar in this case. I mean, trading at 127, it's not the worst, not far from the worst it has been. I mean, look at this, just a couple of years ago, trading at 10.35, you know, insanely low. But it could be the start of a bit of a turning point here, and we could see this continue to bleed out until 126.86. But again, and I'm just playing devil's advocate here, for those of you who are one way or the other on the pound versus the dollar, of course, the dollar is in a relatively similar situation, with the Fed, you know, chasing their tails, trying to combat their own inflationary problems, which it does kind of day to day, it does seem like they're doing, but it's not really overly consistent. The data isn't consistent across the board at the moment. As you can see here, the DXY is actually traded quite high. So we've got this big breaker structure here at around 101.12. We got the break close retest at 102.38, and we have had the push up to around 103.50. It's just trading under there at the moment and finding a bit of resistance where there's a bit of money in the market. We can see that this where the price line is. If you follow your eyes to the left, this is quite a sort of level of interest, I would say. It's definitely been a place of inflection for price over the course of the last couple of years here, and all the way back to probably 2022. I would say not the inflection point, but it's almost the median of the, and I'm using quotation marks here behind the screens, the median of this current range that we've been in with the DXY. So it'd be interesting to see where this one falls out to as well, and whether or not the pound is going to be, I suppose, dropping harder than the dollar, which has been having a rally recently. So we'll have a look at what's been going on. I don't know if I covered this NG trade with you guys yesterday, but that was a really nice win, by the way, from Monday's order book. And then we had this really nice buyback opportunity as well. Really clean breaker structure at 23.73, straight the way back up to our entry. And then straight the way down again. We got a break, close, and retest. Beautiful breaker structure at 24.07. And a big push back into liquidity again. I mean, there's really decent trading parameters in this NG this week. I did not catch any of these, obviously. If it wasn't provided to you, then it isn't taken. Simple as that. But that being said, really nice moves all the same. And it is trading now at 23.22 and still plummeting. So soon enough, we get the trade down below 2250. Then we can look at margins like 195 and 165 in the future. No trading opportunities on this one today as of yet, though. Next up, looking at oil. So oil's been in a serious case of oversupply. And so therefore, with all the demand dying in the market at the moment, through various geopolitical factors, we discussed this yesterday, we will be looking at this one probably continuing to trade lower rather than longer. If you're just a technical trader, then obviously I can appreciate why you probably would have been more bullish than bearish, but fundamentals always win. And at this stage, there's no reason for it to be long. Looking at where it's trading from, the reason I don't like oil long term is because of where it's trading from, and that is there. So it's at currently a really major floor in the market that's been utilized for some years now and has yielded bullish responses every single time we've been trading down here. So we are short in the interim. Obviously, we've still got our short pending order locked in. The fundamentals are short. That's fine. That promotes the bearish trade that we do have in our pending order list. But, I mean, yeah, long term, is it going to bounce back? Is it going to drop through? Fundamentals say one thing, the technicals say another. And I don't like the indifference there. I like seeing consistency with both thoughts. So once our trade idea is complete, one way or the other, we'll then have to reevaluate the long-term view and see where we're headed. So gold, check this back out, 15-minute time frame. So gold, we were looking at short, and we were looking at the short once the alarm triggered, and that was from up at this area here. It took so long for the price action to get back up there. I wasn't even at the screens. I didn't have a pending order in because obviously I was waiting for the breaker structure there. As it happens, gold has actually broken through the high. It's currently trading at 26.79, but the high of this move was 26.82, which was just a stone's throw away from the all-time high. Because of where this one's pulled back from as well, you probably could say that that's just the big daily level of liquidity in there, and it's actually traded up to it already. It doesn't have to reach the same point. This could be the whole area of liquidity where the institutions and banks have their orders, and you will be able to see the details of that in the DOMs. If you use it. If you don't, then visual representation there is more than adequate, to be honest with you. It's more than adequate. The only reason to use DOMs is because you're a nerd, really. So yeah, that's where that is at the moment. Hey, good afternoon, Evie. So at the moment, still looking at potential rejections from this area. I think if we want to be short, we could still be looking at the break of structure under 26.04, same as the last trade idea. I think that's still, a good adequate level of entry, and we'd be looking to clear down 26.65 to 26.47 as the trade idea. And because we're trading here now, it does suggest that we could put the pending order in the market. But I'll tell you what, guys, because of where we are at the moment, I'm actually not going to do that. And I would rather physically be there when this is sort of trading down at that 26.65 area. So instead, I'm going to put an alarm in and wait for that to trigger. And then I can revisit the chart as and when I need to. Obviously, if it's within my trading hours. If it's not, then fine. It is what it is. But yeah, I think we'll check that out if it comes down there. I don't want to lock it in with a pending order at the moment. A lot to do with the fundamentals, because I am fundamentally bullish gold, and any kind of shorts that I take are generally going to be very short term. But also the technical parameters here, the break of structure entry barrier is actually quite far down from the inflection point. So historically, when we take a break of structure trade from an area like this, I would be, say, looking to go short, like there, for example, which is quite a distance up from our proposed entry down here. But I don't like that because of the fact that we're trading on top of this big area in here as well. So it's going to have to be a bit later, and so therefore it's going to require my attention to detail. And I don't just simply want to put a pending order in there at the moment. So Aussie CAD, pending order in there, but I want you guys to remove that from the books. We are no longer going to be short, obviously, in the Aussie CAD. We've fallen all the way down to the current level in 92. We're basically trading there now. A little bit of a shame, to be honest. I'm not going to say I'll drop the ball because the market does what the market wants. But there was definitely a semi-decent trading opportunity that could have been had in there if I was the perfect hindsight trader. Looking after the fact, of course, we've seen this nice move down, but of course, in real time, I was looking at this area here as a major TRF as to stay clear of the short in this area in here. So if you break that down into two halves, it then becomes not actually very profitable. But this one here wasn't too bad. I mean, it wasn't. The only problem is with that one, of course, is we got the BCR of it, and it triggered it around 11:15 at night. So you really would have had to have been on quite late to set up the order for that one. Anyway, looking ahead in where we are, potential shorts here, not really a fan. We've traded too far down. I think at this stage it would be much more safe to wait for the low to be hit. You may have a trading opportunity below this area, but then you have to contend with this area of liquidity in the interim as well. That's the one that runs through here, and that's directly above that major point at the bottom there. So you're boxed in. You are definitely boxed in with this one, and I don't really see any sort of clear path of least resistance. So the better thing is to wait for the push into the liquidity, i.e. down here, and then look to buy back up to this level in there. Alternatively, of course, we get the breakout, the retest of this area, and then we trade all the way down to 90.27, which is the most recent major daily inflection point. I can spot these, piece of cake on the 15, but obviously if you're not quite there yet, that's absolutely fine. And that's that area in there, which is the beginning of this next leg up, which is really quite impressive on that Aussie CAD. So we'll have to wait until that one's achieved. So that's gone. So Aussie NZD short. This is where we currently are on this one. This one actually only triggered today, guys, this morning. Currently trading at 110.038. It's not really done too much at the moment. We did have a decent run to the downside. Probably got to around 65% of trade completion. But now it's come back up and we're actually just sitting, as you can see, directly below the break-even point. So I don't really have anything more to say on that one. We're just going to have to let that run and see what happens. CAD Swiss. Yeah, I mean, potential. I hate where this is trading at the moment, but if we have a good look at this area, this could be a break of structure point for a move to the highs. This is certainly the inflection point here because of this and because of this. So I would say break a structure above here, clear out any of the dead weight, and then we could get that run up to there. Just thinking to myself though about that point. Let me increase the width on that one. Yeah, so the most high probability setup would be to clear out that high, and then we would have our trade set up for about there. And that's what I would think, because the reason I've made that zone not very nice and a bit wider is because of this point. So really that's the point that I'm most concerned about at this stage. But if we can clear that one through, then we have a pretty nice void straight the way up to 62.83. And again, this can be set up as a pending order. So officially, I will be plugging this in. It's a 1 to 2.34, a 0.26886 entry, 62.83 target with a stop loss of around 0.6262. We got 2 levels of liquidity inside the stop loss. It's well protected and a pretty decent path of least resistance straight the way up to that 62.84, 83.80 target. Just want to check out Euro Oz. So the Euro Oz, we failed to get the break, close and retest. I think I've covered this one already. As it happens, we actually failed to get the break, close and retest until this point, which is at 12:15 last night. So we got the breakout, the retest, the big breaker structure straight the way across. The only problem is, guys, it was at 12:15, and so therefore the trade wasn't locked in. So that's kind of redundant now. A shame, because the exact criteria were matched and the trade was completed, but obviously well out of my trading times, and I imagine most of yours as well. Looking at where we are at the moment, the forward view, I mean, you probably are going to be on the side of the bears at the moment from an area like this. The big point of liquidity is clearly where we've been trading away from, so that is not in question whatsoever. We are at a level of liquidity at the moment, but it's not the level of liquidity. We currently are trading inside it, so we need to wait for the breakout of this said level before we can go long. But a rejection of this area is not a difficult sort of trade to call. So, I mean, it's going to be real simple. What we're going to be doing is utilizing this area, right? So this is our old breaker structure, looking for the break, close, retest. I have no idea, it's just disappeared. So that's what we're going to be utilizing for a target. The entry for this one, this is going to be a real nice and short-term rejection trade. The entry for that one's going to be based on that, which is a beautiful little structural point. And all I'm going to be doing is looking to get in upon the breaker structure down, target, and stop loss. And that one, even at that, that's a pretty healthy stop on that one. That's a 1 to 2.8. So that's going to be absolutely beautiful. So that's a pending order that can be locked in there as well. For the longs, I'm not going to provide any. So there's no provision for longs in this Euro Oz asset at the moment. I will be waiting for the big, probably a bare minimum of a 4-hour breakout, retest, and continuation. But ideally, guys, I don't even watch the 4-hour chart, so it's going to probably be daily. The 4-hour sometimes you can get away with, but the daily time frame is really what I'm looking at here. So it's going to be a while before that one completes. I certainly don't think if it is going to be long, it's going to be a trade idea for this week. It will go into our order books for next week. Max, is there a rule to pick the break of structure levels? And so far I just took... Oh, sorry. So far I just look for a level where the price has stopped many times or where there is a swing high-low. Yeah, so this is the same question as yesterday's question. So generally speaking, what we're doing here is we're looking at major inflection points in the market, which are naturally always break, close, and retest. Anything in the interim is really going to be a break of structure. Sometimes I will say a break, close, and a retest because the level I'm looking at has been respected by the market enough times that suggests to me that I should respect the market too. So it's, you know, I can't say it's not common sense. It's not common sense. But it's almost like, I'd say, chart time experience, right? So the more you do it, the better you'll become at it. If the market has retested a level over and over and over and over and over again, then naturally you're going to say to yourself, well, that's got to be a pretty significant level, right? Because it's been retested so many times in recent history. So then you're going to put a BCR on it because BCR is a more robust entry criteria than a break of structure. and you just kind of start getting the flow with that. Sometimes, a lot of the time, the breaker structure trades we take, they will end up having retests anyway. And so like our Aussie NZD, for example, it was a breaker structure trade. Well, to be fair, this is actually a BCR trade, right? So you'll see the retest will take place no matter what, but we're just executing it instantly. So this one from here, for example, this one here, we come down, we get the break close, we get the retest, we get the breaker structure here, and then it starts to sell off, right? And now we've just had another retest as well. So we've got the fresh BOS in here, and that one's just had a retest, and so the pattern continues. It is a different question. Sorry if it sounds the same. When you explain any BOS trade, you have certain levels on the chart, but you draw a smaller level where you want the breaker structure to happen. So all I meant is, how do you define this level? How do I define the actual breaker structure level? The breaker structure level is defined via a period in price action that has seen this. Okay, so this is a structural point. It is a structural point because the price actions have made a series of highs and a series of lows on that same level. So if we just go along here and we study it, okay, lots and lots of pressing into this area and rejection of multiple times. And then once we finally break free of it and we're trading on top of it, we get lots of dips in this level over a period of time. But it is not the main inflection point for price action, because the main inflection point is from this area up at the highs there. That on the 15-minute time frame doesn't look that great. On the daily time frame, you can see it crystal clear, obviously, because it takes out the noise. So actually, in actual fact, what we've seen here looks like a fake out. So we've had a bit of a fake out here on the daily time frame, and then it's come back down. Yeah, okay, cool. Yep, good stuff. Right. Euro Oz, that was that one. We did that. Pending order. Euro Yen, that was already a success. We were waiting for something else to happen with this one. No trade ideas have been provided from my side of things on the long here, and frankly, guys, I'm not going to. I'm not in the Euro Yen headspace right now. Euro NZD, no, nothing to be had there at the moment either, folks. Really nasty looking chart, that one at the moment. Euro dollar, downward trend at the moment. Current level of ranging price action. The price equilibrium state of this one isn't even that clean either, so it's not like we could really formulate too much of a plan outside of it. I mean, it still trades lower, I guess. DXY at the moment, yeah, still got a little bit of a ways to go, so I would say the Euro USD is probably going to trade lower. Look at the daily time frame on here. Okay, so looking at the daily time frame, look at that price line. If I just draw a nice zone right there on the daily, who here in this trading room wants to go short the Euro USD? Any of you guys fancy a short in the Euro dollar? No. Good. It is agreed. We definitely don't want to be going short in the euro dollar. But the thing is, fundamentally speaking, of course, it could be, right? But we don't want to go short yet. We have to clear out this area because this is where the money is in the market. So as soon as we clear out that area, then we can discuss going short. But at the moment, I don't even like it long either. It's a very high risk situation with the dollar at the moment. So I don't like it in either way. Pound against the Oz. A lot of these pound pairs that we're going to cover now are going to look okay because of the CPI. We actually did do quite well in the pound CAD before the CPI even came out. So that was pretty decent. That was one of yesterday's trade ideas. Shame I didn't have the bloody second half of it in there. But yeah, a lot of these pound trades, they're going to look a bit skewed because of this morning's fundamentals. At the moment, I'm still not really a fan of the GA, guys. I've got to be honest. if we get a breakout and yeah. No, I just don't like it at the moment. Definitely not with that daily candle. That looks real dicey. Yeah, it's a dice roll. I think if you got a BCR of 1960, there's not even the trading margin in it though. Then is there? I mean, yeah. No, I'm leaving the G8. Pound against the CAD, hit target. That's good. But looking at where it is at the moment, I mean, this one's not even recovered that well, really. I think with this GC, because of where we are here, and we'll be breaking through this level to continue to the downside, I reckon there's probably a little trade idea in here. So let's say, for example, where we're trading at the moment is the structural point of that, because that's the midpoint of the M reversal. So if we trade this and we get the little retest, probably looking at this on a lower term time frame. Oh, sorry guys. Yeah, we probably could get. Yeah, I mean that's a 1 to 2, isn't it? Yeah, it's not bad. The thing is, the major. Oh no, that's there, isn't it? Yeah, 1, 2, and this low here as well, in comparison to that, which is nothing. So let's have a look at this. I mean, there's no real major significant levels in here, apart from this one at the high and the one at the low. So we're really squabbling over. Well, we're not squabbling over anything, are we, technically speaking? But I'm squabbling with myself over nothing. I mean, that's a 1 to 2.4. Yeah, well, that's pretty good based on a break close retest. So, trading opportunity. See if we can hand some profits back to the market today, eh? Breakout, retest. As soon as the retest is complete, bang, we get the pending order locked in and bombs away. We take it down to 178.91. That's what I'd be thinking about that GC. So when the market comes down to this point here or below, then we set the alarm for this area. As soon as the alarm goes off, we get the old pending order in the market. Guys, just give me a sec, 2 secs. Yeah, so that's the GC short. Rightio, so pound against the Swiss. No. No, that's a rock and a hard place at the moment. Pound against the yen. Okay, pound against the yen as well here, guys. This is another relatively similar idea to the GC. Okay, so we've come back. We've retested this nice floor in here. That's definitely a decent one. And now we're looking at continuation back down to the previous lows where we've just been. So then this becomes the trade idea. I just have to work out the trading margins though, right? Because we don't want to be taking the trade if there's not a decent margin in it for us. So the breaker structure element here is not crystal clear. There is a bit of an ascending level. But I think, I mean, historically speaking, this would be the breaker structure level to go for. Of course, we have this kind of, this area in here, which makes me a bit sketchy, I suppose, about this opportunity. Yeah, because that's had reactions back in time as well, hasn't it? That one there. So let's just make that a bit wider. And then we would essentially be looking to get in here, I would say. Target and stop loss for a 1 to 2.3. So that one could be a pending order. The reason it can be a pending order is because we're coming from a much more significant level than we're crossing. And so this is bigger than this, and so therefore pending order entry, and we can see where we go. I'm not interested in a pound yen long, so if that was going to be a question, then don't sweat it. Not interested in a pound yen long today. Right, cable. I'm already not interested in that one, so that's fine. NZD against the CAD, we can remove this. So goodbye NZD CAD. The move that we've had down here over the last sort of 24 hours has been really good. But unfortunately, I can't take credit for any kind of trading in it because the entire thing has gone without me. But it has been really good nevertheless. And I believe that I will be looking to take another long, just the same way I did here, from down at this level, possibly from this one. But we've already hit this one now, as per the last forecast I was looking at NZD CAD down here. And I'll probably be looking to do the same again. So no trading opportunities for today. But hopefully in the next couple of days or so, maybe Monday next week, we'll be adding that one back to the order book. NZD Swiss, no thank you. NZD Yen, remove, no thank you. Beautiful rejection from this level down here. Been a real grind so far. I'm going to set myself up with an alarm. Again, 90.20. If price action comes down here, we dip our toes in the money. Then we can look at the buy back to 91.40 and take a little bit of a longer term long to that 91.40 area. But at the moment, it's a no can do. NZD USD, no. USD CAD, no. That was a stop out, by the way, guys. The trade idea was good and it did work out really nicely. The only problem is when we got triggered, we got taken out. So yeah, it's just right trade, wrong time. USD against the China, possible short. Don't really like. I mean, it is a contrarian view because of everything else that we've been saying, of course. But, yeah, possible short. Consistent series of lower highs being formed. We have the same set of lows, which means we do have a falling wedge pattern, which is beginning to form. Probably on a bit of a higher time frame, you'd be able to see that one more clearly. I think at this stage, if we continue to be held back via this area, then that's good news for our short, and we'd be looking at getting into this one via a break of structure of this level here, and then we would be short there, target, and finally stop loss. And that's the kind of thing that you'd be looking at for that one. So that can be locked in via a pending order. For some of you guys, you might not have the USD China in your prop firms. If you do have the USD China, sometimes it can be an expensive asset to trade. So please do your due diligence beforehand and don't just blindly take it, because it might cost you a lot to take it. And then, you know, because of the spread or whatever being terrible, you're not really going to make too much off of the back of it. USD Yen. No. This needs a fresh pair of eyes anyway, this one. But it's still a no, though. I'm not interested in the USD Yen right now. Especially not trading it long. There's no margin. To be honest with you, there's hardly a margin to trade it short. So, yeah, it's going to be a no can do for me today. I won't even bother with the USD seeing. That's fine. Right, team. So, we are currently on 2:05. 25 minutes to go before the bell rings for the US markets. Let's get ourselves set up and ready to go for that one. Yesterday's breakout session, unfortunately for me, was absolutely god-awful. Took a hit in the NAS, took a hit in the Dow Jones. The move in the NAS 100 at 3 o'clock in the afternoon was actually really nice. And I was just too much out of it then to bother getting involved. The move in the US Dow Jones unfortunately happened before the market breakout. When the market breakout took place, we did have a move, but it was so quick that there was no real trigger like opportunity, if that makes sense. So we sort of shot down at 230. My initial liquidity was situated at about this area in here, which is right on top of it, and I didn't even really plan for any shorts thereafter. But thinking about the trading margin that I would have had to have worked with between 42.88 and this area at around 42.78, it's just nowhere near big enough. There wasn't enough room for me to maneuver. So yeah, it was pretty rubbish, to be honest. Especially this Dow Jones wasn't very nice at all. Now, looking at where we are trading today, the US 30 Dow Jones currently trading at around 42.78. We do have a lovely breakout and retest happening of this area in here, which does lend itself to the belief that we could be seeing a bullish breakout take place this afternoon, back up to there. Now, this is a very, very large trading margin for a 1 minute time frame. But given the nature of the markets recently and the size of the moves that we have been having, I don't think it's too far-fetched to think that's going to happen. Now, what's going to make it even more likely is the fact that I won't be getting in down there, but actually above here. So this breaker structure element is what I'm going to be specifically looking for. And then I'll be looking at the long, above, target, and the stop, which is going to be at about there for a fixed 1 to 3. Obviously, we love 0.75 trades. Not often that we get them, not mega often, so we'll just have to sit tight and wait to see what happens with that one. But if we can get this margin done on the US 30 Dow Jones, fantastic. Now, there is a short as well. The short opportunity is going to be situated there. That's going to be the TP. Nowhere near the kind of size of the trading margin as the long, but still, nevertheless, it will be okay. Now, looking at the breaker structure part, we are going to be getting into the market about there as our point of interest. We can see that there's been plenty of highs in the market, then confirmed via the retest and continuation. So we will be looking to get the breaker structure in at around 42.75, target profit down at 42.72, and that's your trade. So let's just dig this in quickly, place it, and yeah, you're looking. I'll probably go for the top side of that margin for the stop loss, just because of the stop loss itself. Give that a little bit more room to breathe, and that's going to yield a 1 to 2.63. So hopping over then to the NAS 100. To be fair, it's almost like the reversal of the Dow Jones. So the long margins are shorter than the bearish ones, I believe, just from the initial glances. Let's have a look at this. So this is our no man's land. Target profit 1 is down there. Target profit 2 is up there. So you're definitely looking better on the short than you are the long for trading margins, I suppose. Let's line this up with some stops and stuff. So you've got around about a 1 to 2.2 on the short, and you have, I don't reckon it's going to be very good on the long, I've got to be honest. Maybe a 1 to 1.6. Yeah, exactly. Yeah, exactly. Well, I want a 1.7 to be fair to it. So yeah, 1 to 1.7-ish on the long. So I think based on this, you should probably look at the NAS long. Sorry. You should probably look at the Dow long, and you should probably look at the NAS short, or something, or some kind of setup like that. I would just not worry about the NAS long at this stage, personally. But the Dow Jones has got a couple of really good ideas. The unfortunate thing is you can't take the trade. You don't want to be taking the trade in the pre-market, so you'll have to sit that one out. Remember, guys, you do have every opportunity that if the market dives down to here before the market opens up and then jumps back, you can happily take the trade upon a breaker structure down at the floor, back up to the highs there, or wherever you want. If you get a break close and a retest of this area in here, then the trade idea is to there. But I've got to be real honest about this one. I fear the strength of the markets to get down to there today, after we've already suffered some pretty significant losses here. But that is the opportunity, regardless if we like it or not. That is what we'll be ultimately looking at if the market gets a break close and a retest of this floor there. Okay, but that's pretty much it for this session today, guys. I don't think I have anything else to give. Probably ended up removing more pending orders than we added to the market at the moment. The returns this week have been, I would say, very, very modest. I mean, we had a 0.5% off yesterday from the stocks. We had a 0.6 0.62% gain from one of our GC trades, another minus 0.25 from the USD CAD. Yeah, off the top of my head. So, you know, we only did we add? Yeah, I mean we added, or maybe we lost like minus 0.1 or something. I need to check the track record. I haven't checked it. I haven't checked it today, but yeah. So you know, it's very very modest at the moment, incredibly modest. We just got to keep pushing through and see where it goes. See if see how this afternoon gets handled. So does anyone have any questions then, team? Anyone got any questions about the plans for this stock session this afternoon or anything else that we've discussed? All good? Yeah, good. Okay, well, I'm going to take that as a no. That's absolutely fine. So, in that case, guys, like I said, I'm going to wrap things up. I hope you have a really good day today. Take care of yourselves out there, and I will catch up with you in the Traders Lounge. And yeah, let's go see what we can do. All right, so take care then, team. I'll see you then. Cheers. Bye-bye.